Imagine a world where artificial intelligence isn't just a buzzword, but a driving force behind economic growth. That world is here, and it's being fueled by a handful of tech giants. AI spending has single-handedly added a staggering 0.5% to GDP growth, according to Pantheon Macroeconomics, and the so-called Magnificent Seven stocks are leading the charge. But here's where it gets controversial. Is this concentrated growth sustainable, or are we building an economy reliant on a few tech behemoths? The S&P 500, a key indicator of the U.S. stock market, has soared 10% year-to-date, reaching yet another all-time high. This impressive performance is largely attributed to the Magnificent Seven tech companies, whose aggressive investments in AI and its infrastructure are paying off big time. Their foreign revenue streams, boosted by a weaker dollar, are further amplifying their dominance. In fact, concentration in the top 10 stocks is at its highest since the 1960s, raising questions about market diversity and long-term stability. And this is the part most people miss. The sheer scale of their spending on data centers, servers, software, and other IT infrastructure is having a tangible impact on the broader economy. Pantheon Macroeconomics estimates that without AI-related spending, GDP growth would have been a measly 0.6% annualized in the first half of the year, compared to the reported 1.1%. This suggests that AI is not just a tech trend, but a macroeconomic force. Substack Jens Nordvig echoes this sentiment, predicting that AI capital expenditures will reach 0.7% of GDP growth this year. While pinpointing the exact value of this spending is challenging, it's undoubtedly in the hundreds of billions of dollars. Pantheon's data shows spending on computers and IT equipment approaching a staggering $1 trillion this year. This AI-driven growth isn't confined to the U.S. either. Global markets are feeling the ripple effects, with the stocks Europe 600 edging up, though Asian markets like Japan's Nikkei 225 experienced a dip. Cryptocurrencies, too, are riding the wave, with Bitcoin reaching new heights. As we witness this AI-powered economic transformation, it's crucial to ask, are we witnessing a sustainable revolution or a bubble waiting to burst? Is the dominance of the Magnificent Seven a sign of innovation or a warning of market fragility? The 2025 Fortune Global 500 list, ranking the world's largest companies, will undoubtedly reflect this AI-driven shift. But what does this mean for smaller players and the overall health of the global economy? The answers are far from clear, but one thing is certain. AI is no longer a futuristic concept. It's a present-day economic powerhouse, and its impact will be felt for years to come. So what's your take? Is AI the key to sustained growth, or are we heading towards an uncertain future? Let's discuss in the comments.